If things continue the way they are today, in 20 years, 80 to 90% of Americans will be renters and buy and hold landlords will be multi-millionaires. Hey everyone, me Kevin here. The housing market is a complete disaster right now. Not necessarily for the wrong reasons. It's really good for sellers. It's just really bad for buyers. In fact, buyers today are more qualified than ever. The average credit score of a house purchase right now for a buyer is 800. There are so few deals available that very well capitalized folks are winning deals with higher quality loan terms, higher down payments, locked in 30-year rate loans, and lower quality borrowers, people with lower credit scores or less stable income, aren't even able to get pre-approval letters. These are the opposite characteristics of what we saw in the 2006 to 2007 housing bubble bust. When anybody was able to get a loan, dead people were able to get a loan, people without jobs, income, or assets were able to get loans, and people with horrible credit scores were able to get loans. It's literally the opposite today. However, something that never ceases to amaze me is the way society and the market reacts to prices going up. The more unaffordable housing gets, it seems, the more and more people are buying up all of the housing that exists. And in my opinion, this is the definition of insanity. Last April, when everyone believed the housing market was going to crash as people stopped buying houses, or that people would stop buying houses, people would die, leading to a flood of housing inventory because we're in a pandemic, tenants would stop paying rent, and rental investments would end up bleeding money, and people would go bankrupt, and there'd be these floods of foreclosures and eviction homes or whatever. I said on this channel, and the videos still exist, folks, the data shows real estate is holding firm. It's time to buy real estate now before everybody else does. And you can see those videos. They're still there. Just go look at my real estate videos from April of 2020. Between March and August, after saying this, I bought 13 properties over the last year. I plowed money into real estate. Now real estate in my area is up 20% year over year, and I think we're just getting started. And most of these 20% gains from this year over year comparison didn't come over the entire year. They came between September and today. So basically right when I stopped buying. Now, I'm not trying to pat myself on the back, but I want to show you, or what I want to show you is the ludicrousness of how buyers of any kind of securities or real estate operate. When real estate goes up, people want to buy it. When real estate is suffering or potentially about to suffer, nobody wants real estate. When ARK invests in the stock market and Cathie Wood has her fund skyrocketing 20% per month, people plow money in. When Cathie Wood's fund falls 33% in a month, people leave like crazy. This is so the opposite of what we should do. This is why we say, buy the dip, dime in hand. It applies not just to stocks, but it applies to real estate as well. Now, that's great, but the problem is still present. Right now, people are buying homes like crazy, but it's not just the regular retail buyers because the suits are coming in as well. Ordinarily, only 10% of houses are sold to investors of houses. Multifamily, you're usually 50-50, investors and retail buyers. With houses, though, ordinarily only 10% are sold to investors. That means most of the time when you're competing for a house, you're competing against other home buyers. One of the reasons I've loved single family so much, because as an investor, part of that 10%, I know how to dominate when I'm negotiating. Well, the Wall Street Journal just this weekend reported that in areas like Texas, 25% of all homes are being sold to investors. And in some cases, pension funds are now coming in, buying up blocks of houses. And when houses get commoditized like they are, it becomes almost impossible for the everyday buyer to compete. When I was buying last summer, it was easy for me to buy a wedge deal. I was getting properties for below market value left and right, and anyone buying with me should be way up today. Yet, euphoria has officially hit real estate, and now I'm very concerned that buying on the market value or on market real estate is next to impossible. I'm seeing hoarding housers and fixer-uppers sell for nearly the price of fixed-up properties. It's absolutely incredible what's happening in the real estate market right now. It's one of the reasons I'm doubling down on my efforts to find properties before they hit the market. My favorite way to do this right now, because it's really lazy and it doesn't take a lot of effort, is downloading the Deal Machine app, which you can get some free credits for by going to metkevin.com/deals. And then as I'm driving around, when I go around looking for houses or multifamily, I just click on the different properties I want to send postcards to, and it automatically does it for me with my own custom postcard. So that way, hopefully, if people want to sell, they call me before just putting a property on the market. That way, hopefully, I can get a deal without having 20 or 30 offers against it. Again, that's metkevin.com/deals. But why the heck does it even make sense to buy real estate? Well, because remember this. Last summer, when I was buying real estate, it was easy to buy deals. There were wedge deals everywhere. I was getting properties below market value left and right. And again, things were wonderful. There was balance in the market. But today, we don't have that balance anymore. Today, people are paying whatever they can just to get in. Now, I don't necessarily blame people for paying whatever they can just to get in, because here's the thing. Interest rates are expected to go up in the future, at least over the near term here, the next 4 or 5 years. But who cares when you can lock in a 30-year low fixed rate loan right now? And besides that, real estate might run hot for years to come, which means the potential for appreciation, which is a form of speculation, is very high. Last night, I talked to Lauren about how I'm concerned that our area in Ventura, California, is potentially going to turn into the next mini San Francisco in terms of real estate pricing. Not only can people now work from home, but why live in San Francisco when you can live in the Southern California coastline climate, which makes up only, well, I should say, the Southern California coastline climate is part of the Mediterranean or chaparral climate, which is just found in 7% of the world, and the only place you can find it is in SoCal in the United States. All of a sudden, you have a lot more people with lots of money moving into areas with really desirable weather. And what I mean, look, don't get me wrong. I love seeing people want to move to the area, but I'm very concerned about what I'm seeing in regards to pricing. I don't want to become a mini San Francisco, even though that means my little $600,000 rentals, which is already really, really high, some of them that I bought for $300,000, even though they might go to $1 million, which sounds even crazier, that's what happens in San Francisco. I don't believe that right now we actually have the catalyst for this bubble to burst. And that's the crazy and concerning thing, is I think the catalysts all point to people just continuously buying real estate and prices going up and inventory not being around. Why would inventory be around when Joe Biden says, hey, having trouble paying your loan? No problem. Our administration over at the Consumer Financial Protection Bureau is now going to potentially, they're working on this rule, but this is what they're working on, allow you to extend your loan if you're behind on payments by 40 years. We just don't want you to lose your house. We're going to stop foreclosures through, or at least into 2022. Look, I'm not forecasting doom and gloom here. In fact, I'm kind of forecasting the opposite. I think the market's going to keep booming. It's kind of crazy. So I'm forecasting boom and zooming instead of doom and gloom. But I'm very concerned about the widening of the massive wealth gap that we already have. The massive K-shaped recovery is just getting exacerbated by real estate. And I've said this time and time again since the start of the pandemic. And if you've watched this channel, you already know this. Hopefully you've taken advice. If you don't own real estate, stocks, or an established business, you're screwed. This country's manipulated capitalistic environment bails people with assets out first, like I just described with the Biden plan. At the same time, housing inventory is nearly non-existent. At the end of 2012, in my city, we had 80 houses on the market. Today, which by the way, 80 houses on the market was well below our healthy average of 250 to 300 houses on the market, which is when we would have a 3 to 4 month supply. Then, in 2012, the end of 2012, beginning of 13, we had 1 month of inventory as a supply, around 80 houses. 6 months later, beginning, I want to say March, April of 2013, real estate prices went up 20 to 25% in a matter of 2 months. It was literally like March and April. It was like, okay, we're going up, adjust. And it was up 25% like that. I'll never forget it because I was actively working with buyers and sellers at the time trying to figure it all out. We're charting it day by day. Everything went to the moon nearly instantly because inventory was so low. And the same thing is happening again today, except it's even worse. See, today, instead of having 80 houses on the market in my city, we have 40 houses on the market. Less than half the supply we had right before the market popped 20 to 25%. Now, unfortunately, what's ironic about this rally is, like I said, I think it can sustain itself. I don't see the signs of a bubble yet. I don't see the red flags yet. Even break-even real estate for cash flow purposes is desirable right now. Why? Because when people go buy a house with 10% down and turn it into a rental later, let's say they put their entire net worth in of $50,000 and they buy a $500,000 house, that's their 10% down payment. Maybe they got credits to cover their closing costs. This breaks even, let's say on rent. So they're making no cash flow. They're getting rent and they're paying the mortgage with it. Guess what's happening? Well, when property values go up 10%, that person doubles their net worth. When property values go up 20%, that person triples their net worth. not considering selling costs. It's going to be smaller over time anyway. They're doing this because the reason people are buying homes is because you're able to lock in 30-year fixed rate debt. So even if the market falls, you can't get margin called on a house. All they have to do is rent out the rooms or rent out the entire house if they can't make the payment. As long as they're buying in a quality area, they're not at risk of not being able to find a tenant. Worst case scenario, you just drop the rent a little bit and fine, maybe you're negative $200 a month. But if you can't afford $2,400 a year as a negative, worst case scenario, if the market fell and you had a lower rent, you probably shouldn't be buying real estate anyway. The point is, you're not having to float the entire payment. And even if there's a crisis where all of a sudden tenants stop buying, what happens, or tenants stop paying, what happens? Oh, the government bails landlords out. Mortgages first, remember. Mortgages got the big bailout. It's nuts. Every month, you're also paying off the property. So really, even though it feels like you're spending this money every single month, it's really your tenants paying off your properties for you. All you have to do is follow your simple rental renovation rules, which I talk about in my do-it-yourself property management and rental renovations course, where you can make a ton of money by not over-improving your real estate. Stop going in and tearing out countertops and bathrooms and kitchens. Focus on what matters, making a house nice and safe. And that's different from cheaping out and lipstick on a pig. Nice and safe is important. But the point is, people are looking at housing right now as way less risky than stocks, or at least wealthy people are. People see frothy valuations in the stock market, so they're flooding into the housing market. Even with break-even real estate, they're speculating on the future value. And even if worst-case scenario, they're wrong in the speculation, they'll either get bailed out or they won't have to sell with a 30-year mortgage, and they'll just keep renting out the property. That's the crazy thing about real estate. And you've got really high-quality borrowers right now to where you might not necessarily see these high-quality borrowers default. Now, obviously, real estate does come with risk. The biggest risk right now are interest rates. If interest rates all of a sudden pop 2%, real estate prices will get instant downward pressure of 20%, which could start a little bit of a downward spiral or a large downward spiral. Which that would mean that if the person who just bought a $500,000 house with 10% down, their entire $50,000 net worth, they would all of a sudden be upside down. They would have eradicated their net worth, all because of interest rate risk. But they won't have to sell. They won't get margin called. And historically, buying and hodling real estate is a hedge against inflation. And when there's inflation, inflation makes paying your debt off easier. So even if real estate only goes up at the rate of inflation, which usually exceeds the rate of inflation slightly, there are real returns on top of inflation. Not massively, but there are some. When you consider leverage and the fact that leverage makes it easier, and well, inflation makes it easier for you to deleverage, to pay off your debt, it almost is a no-brainer that you should be trying to buy real estate. The hard thing now is finding a good deal. Now, this all makes it seem like I'm saying go out there and overpay for real estate. No, I'm not exactly saying that. If you could find a good deal on real estate, or at least a deal of some degree on real estate at this point, the margins have gotten a lot tighter. For me, I operate differently. I spent a ton of money when things crashed or when things were down in real estate, whether that was 2012, 2013, or right when that pandemic was not crashing real estate. And I'm like, people are dumping real estate because they think it's going to crash. I don't think it is, because I'm not seeing it in the data, and I saw it 2 months before everybody else, probably 6 months before the entire market really started getting excited about real estate. That's when I saw it, and that's when I was buying like crazy. It's the same thing I do with stocks. Like at the end of February and early March, I've invested over $4 million in the stock market. Only some of that cash came from luckily selling right before the crash, but I've plowed more money into the stock market. But focusing on real estate here, I'm nervous. I'm very nervous. I'm nervous that in 10 to 20 years, if you do not own real estate, if you do not own assets, you're going to get left behind. 80 to 90% of owners will end up being institutions, funds, or wealthy landlords buying up all the cheap houses they can. The American dream is evaporating, and we are going to become a renter nation at this rate. And it's going to rob people of the easiest way to build wealth in existence. It's not stocks. It's real estate. If your net worth is under $100,000, the easiest way to build wealth is real estate. And I teach you all about that in my programs linked down below. Check out that coupon code. And it won't be long now before politicians, just wait for it, start pushing 0% down loans for everyone to try to make housing somewhat accessible again. We'll see. But for right now, I'm very nervous that this is the start of a cycle of the 1% getting even richer. Thanks so much for watching. I'm very concerned. And folks, we'll see you in the next video.